I'm a young man or a young lady. I've got little bit of money and I want to get into real estate. How should I start?
Well, I always say you need to get you a mentor. You need to get somebody because, you're going to pay for that education some kind of way. So I tell people when you're trying to be cheap with your education, this is what's going to happen. You're going to hit your head several times up against the brick wall. So you can either figure out how many times is your head going to be able to take hitting that brick wall, you falling down and getting up, or would it be best for you to go ahead and invest into yourself by investing in a coach or a mentor? And yes, it's going to cost money, but that person now has been through so many of the trials and tribulations in real estate that they're going to help you be able to avoid a lot of the pitfalls. That would be one. Two is understanding how to be able to raise additional capital. So I'd be asking, like, how much money? When you say I have a little bit of money, well, what's a little bit of money? Because that money is going to dictate which side of real estate we can first get you into. So in the U.S., what we did is right after the pandemic, we had a lot of family and friends that had reached out to us that pulled all of their money out of their 401ks and things like that because the stock market was crashing at that point, right? They didn't know what this pandemic was going to turn into and how long it was going to be. And so they called us up and was like, do you have any recommendations on where we can invest so we can, protect what money we have left? So we created a JV program. So we had a line of credit with a lender for about $5 million. It allowed us to do anywhere from 10 to 12 flips a year. And so what we would do is we would use that line of credit, and that being the realtor broker, I would go out, find the properties, negotiate them as cheap as possible. We also built a general contracting team that came in. So now we could control the cost of that renovation. And then we allowed investors to now invest. And so the goal was to help them build their capital up. So our minimum investment was $25,000. But it allowed them to have some ownership now into some real estate. It allowed them to get their feet kind of wet, especially for my newbies, right? And then it allowed them to be able to see our process and to be able to trust. Again, you have us 80% in the deal. You're only 20%. So, of course, we're not going to put you in a deal that we don't feel comfortable with. And so for a lot of our investors, for several years, we were able to wash, rinse, and repeat their money twice. And we were paying out anywhere from 10 to 25% profit. And so you can't get that in a bank. So I would say if anybody new is coach or mentor, figure out the best way of how you're going to be able to increase your capital, and then understand the steps to real estate. So for me, I always feel like, real estate is like going to 4 years of college, and you can't skip a grade, right? So I always teach on wholesaling is your first one. Why? Because wholesaling is the easiest way for you to just be the matchmaker. You find the seller, you find the buyer, you match them up, you get your money, you move on. Very low risk. So for me, I consider that the freshman years. And then your sophomore years is now, okay, you ready to move into some fix and flips. We've helped you build your capital up. So now you have money to be able to now go out, get your own loans, and be able to fund your renovation. Then after that, you're going into your junior year. Now you're somebody that you're looking at and saying, well, now I might want to hold on to some of this real estate. Do you want to become a landlord at this point? So now we're looking at building your real estate portfolio. And by your senior year, we need to be trying to figure out, are you planning to continue to be a landlord? Do you now want to move into property management? Do you want to move into commercial? Do you want to move into development? So for me, real estate has been great because to me, I feel I did it the right way. I did several years. We bought a We Buy Ugly Houses franchise. Okay. That cost us $75,000, right? So that was our cost of education to say we want to get back into real estate, but we want to do it the right way.
No, that's amazing. There are a lot of people, speaking about real estate. And for the regular people that listen to this podcast, right, there's a lot of people I've spoken to who are into real estate. But why do you think it's a good place for people to invest their money?
Because with real estate, over 25 years of seeing the ups and downs of it, and the industry is going to be cyclical, that's for sure. But the reason why I feel it's one of the safest vehicles investment-wise is as long as you know what side of the real estate transaction to be on. Because at any given time, when there's foreclosures happening, well, for the people over here that are being foreclosed on, obviously that's not a good time to be in real estate. But for an investor, that can now come in and buy these properties deeply discounted because people need to get out of the debt of it. Well, you're on the right side of real estate, even in trying times. Same thing when the market is doing very well at this point. If you are a landlord, this is your opportunity. If you went several years of not being able to raise your rents because the market was down, that's fine. But you need to be able to recognize as soon as the market is up, you need to be increasing those rents so you can increase your income. So for me, real estate has always been, you just need to know what side of the scale to be on depending on where it's tipping.
Robert Kiyosaki spoke about this concept, and I thought it was very interesting. You know, most people consider their first homes as an asset, the homes that they live in. And, you know, he said, nah, it's not. It's not. Actually a liability because, you know, it's taking money away from you. I want you to elaborate on that one.
Yeah, no, he's 100% right. So I think that getting into home ownership to me is definitely important because I say that until you have navigated purchasing probably the largest asset you may ever buy in your life, then getting into real estate and investing into real estate to me is not the right way to go. Because I really think that you need to understand the whole process of getting the real estate, being able to hold on to it. I tell people all the time, it's not about whether or not you can get it, it's whether or not you can keep it. And that's where the real work and the challenge is. So I absolutely agree. Now, could you use that first piece of real estate, your home, to be able to kick off your real estate journey? Absolutely. So that's where I would say that you can turn around and take that liability and turn it into an asset. Especially like in the U.S., we bought our house in end of 2019. Interest rates were extremely low, got it for a great price. Well, in just 4 years, we almost have double the equity in our home. So now we can play because now it's like, all right, it only took us 4 years. And where are you going to get that rate of return on your money that fast? 4 years and our house is now double what we pay for it. Now we can go in and extract that money out, whether it's a HELOC or a HE loan, and be able to invest into other real estate and grow it. So it may start out that way as a liability.
Yeah.
But if you do it the right way, you buy in the right market, you understand what you're buying and how the market is going to progress, then you also know when the sweet spot is. Because we're looking now, we're like, is this the time for us to go ahead and start pulling some money out just because we're expecting the market to also flatten at some point? So that huge 4 years that we got this property, increase, we now are seeing that it's kind of like leveling out.
Yeah.
And so now we're like, maybe this is a time for us to go ahead, pull some money out, use that to again add to our portfolio.
I did it. Just before we got married, we got our first property. 2 years after, we took money out of that and then bought a bigger property. So, I understand the dynamics in that. It really works.
Yeah.
But today, though, there are a lot of people talking about rent to rent. Doing serviced accommodations, this Airbnb model, where, someone rents a property, let's say a 2-bed or 3-bed, and then they split it up and, put an Airbnb and make some money out of it. It's actually very common in Ghana as well as the UK. I'm not sure too much about the US.
So it's kind of where it originated. So corporate housing as a whole, which everybody now calls Airbnb, was actually started by Oakwood Worldwide, which is short-term rental company. So they're the grandfather to the industry. I did 11 years in corporate housing. So when we moved to Houston, that was my introduction into their property management or their real estate. And at any given time, we had 300 and something units. So I'm very familiar with the short-term housing model. Now, we didn't do anything less than 30 days because we didn't want to have to deal with you considered a hotel. And so you got to pay the hotel taxes. But I also saw the writing on the wall. So we had our corporate housing business for 4 years. Airbnb started coming around. It became a fad. But I also knew what was getting ready to happen. A lot of the apartment complexes now have pulled out. They don't allow you to Airbnb. So then what did that do? It pushed everybody to now go buy single family homes and turn those into Airbnb. In the US right now, it's a major shortage on housing nationally. So a lot of states have now made it so that you can only have like one Airbnb in that particular area. Georgia's one of them. New York is another one. San Francisco, they are putting a lot of restrictions on it. I got out of the industry because I knew that it wasn't going to last very long. And in the U.S., you see more people now that jumped on the Airbnb bandwagon that are now trying to get rid of their inventory.
But I mean,
But it's huge here.
in Ghana
Yeah.
and in the UK. You know,
Right.
people are doing it.
Right.
And, you know, they are making a killing out of it.
Yeah. Yeah.
You know?
Yeah. But again, that's real estate. So as I was saying as long as you know which side of real estate to be on. So for those, when I was in the short-term rental business, we were making a killing. But when the pandemic hit, it taught us, it shut everything down. And so we had over 200 units, and now we're having to break leases and things like that because we don't know when things are going, turn around. So I always just say that as long as you know which side of the scale to be on in real estate, you can make a killing in real estate.
Yeah. No, you can certainly do. I'm pretty sure you had a lot of, properties in your portfolio during the pandemic.
So not anymore. And because I don't like being a landlord.
Okay. So around that time, how was the property market for your business?
It was good. And the key was, again, when we looked at buying properties and we knew we were going to turn them into rentals, it was location first and foremost.
Okay.
It was what makes sense. For us, our portfolio, we didn't want like 2-story homes. We didn't need the homes that had 5 bedrooms, 4 baths. Why? Because those were the larger families that was just going to be a stepping stone. They may only rent for us for a year. So our sweet spot was 1-story, 3 bedroom, 2 bath, because that tends to be more of your starter home.
Okay.
So that's kind of how we grew it. But after a while, I was like, I don't want to be the landlord anymore.
I'm really trying to understand, some of the struggles you went through that made you say, oh, I don't want to be a landlord anymore. It looks like you pulled out pretty quickly.
No, because we were doing, we had properties in North Carolina even before we moved to Texas. So again, property management as a whole has been in my blood because that's where I started.
Right.
So I'd been a landlord to some degree to other companies. I was their property manager. So, was working in the arena of being a landlord. And I think with single family homes for us, it was going to take away from our true passion, which was the evolution of moving into development.
Okay.
And but we bought those properties because we knew that they were going to increase in market value. And so when we sold them, that gave us another cash injection to now move towards. So for us, it's always been the evolution. It's always been the stepping stone to eventually get to development. And how do we do that? And so all of that was about building capital. So when we had the rental portfolio, we looked at it and said, okay, are we going to keep it for 3 years, 5 years? What's the market going to do? And then when we sell it now, again, we've got this influx of additional cash to go to the next level.